Toyota just sent shockwaves through the entire American auto market with a move nobody saw coming. Overnight, the company announced massive discounts on its most popular trucks. Tacoma, Tundra, and even select hybrid models, creating a frenzy that dealerships and competitors are scrambling to keep up with. This isn't just a seasonal sale or a limited rebate. Insiders are calling it one of the boldest price slashes Toyota has ever attempted in the US market. Industry analysts are stunned because Toyota trucks are already known for holding their value. Yet these new deals cut thousands off sticker prices, undercutting rivals like Ford, GM, and RAM, at a scale that could spark a full-blown price war. Buyers who have been sitting on the sidelines waiting for interest rates to drop are suddenly flooding showrooms. Social media is buzzing with reports of people lining up before dealerships open, hoping to lock in unheard-of discounts before inventory runs dry. Toyota's timing is razor-sharp, landing just as the Big Three struggle with unsold stock and shrinking profit margins. By dropping prices this aggressively, Toyota is putting direct pressure on competitors that are already offering incentives to move metal, forcing them to consider even steeper markdowns or risk losing market share overnight. Behind the scenes, experts believe Toyota is betting big on a long-term strategy, sacrificing short-term profits to dominate the truck segment for years to come. Their new hybrid powertrains and rock-solid reputation for reliability make this discount move even more dangerous for rivals. Dealerships from Texas to Michigan are reporting a surge in trade-ins as owners of aging F-150s, Silverados, and Rams rush to capitalize before the market shifts. Meanwhile, used truck prices, which soared during the pandemic, are suddenly showing signs of softening as buyers pivot to these brand-new discounted models. Financing departments are feeling the heat too. Banks and credit unions are fielding a wave of applications, and some lenders are already warning that the sudden spike in demand could drive down interest rates on auto loans faster than the Federal Reserve anticipated. Fleet buyers, construction companies, delivery services, and municipal agencies are quietly negotiating bulk purchases, sensing an opportunity to refresh their lineups at a fraction of last year's cost. Even the aftermarket industry is bracing for impact, as more new trucks on the road means a future boom in accessories, upgrades, and service contracts. Analysts say this single move could rewrite the playbook for how automakers compete in a high-interest rate economy. Toyota's leadership is signaling that they're not afraid to trigger a domino effect that forces competitors to slash prices and rethink production schedules. Supply chain experts warn that if Ford or GM responds with similar cuts, parts suppliers will face sudden shifts in demand, and factories may have to run overtime just to keep up. Investors are already watching the ripple effects in real time as auto stocks show wild swings on the news. The next few weeks will reveal whether this is a short-term shock or the start of a seismic change in how trucks are priced and sold across America. Dealers are urging customers not to wait, predicting that inventories could tighten quickly if Toyota's gamble pays off. Early buyers are sharing stories of walking away with deals they never imagined possible just a month ago, some claiming savings in the five-figure range after stacking factory incentives with dealer markdowns. Competitors remain silent for now, but whispers from Detroit hint at emergency meetings and fast-tracked marketing plans to counter Toyota's surprise offensive. And as the industry scrambles to react, questions are mounting about what this means for the broader economy. Will this spark a new wave of consumer spending, or will it strain already thin profit margins across the automotive landscape? Economists are already dissecting the numbers, pointing out that Toyota's decision could ripple far beyond the showroom floor. Lower truck prices mean construction firms can expand fleets at a discount, potentially accelerating housing projects and infrastructure work. Logistics companies that rely on durable pickups for deliveries are suddenly recalculating budgets, finding room for upgrades they had postponed for years. That kind of spending injection can create a surge in related industries: steel, tires, and even roadside service providers, all benefiting from the sudden uptick in new vehicle purchases. Meanwhile, dealerships are facing an operational scramble. Sales teams are working extended hours, finance managers are juggling record volumes of paperwork, and service bays are preparing for the flood of pre-delivery inspections. Some dealers have even reported that their online inquiry systems temporarily crashed from the spike in traffic the morning after Toyota's announcement. Independent used car lots are equally on edge as they watch resale values wobble, fearing that a fresh supply of discounted new trucks will eat into their margins and push older inventory into steep depreciation. Industry veterans say they've never seen a legacy automaker take such a calculated risk at a time when interest rates remain high and consumer confidence is shaky. Toyota appears to be betting on its deep cash reserves and global production network to absorb the hit, while rivals tied to narrower profit margins could find themselves squeezed. Inside Detroit, sources describe hurried conference calls among executives at Ford and GM, with some insiders warning that if they don't match or at least respond quickly, they could see a mass exodus of loyal truck buyers, especially those who prioritize reliability and resale value over brand loyalty. Financial analysts on Wall Street are watching for signs of a ripple in the bond market, as automakers with weaker balance sheets may need to issue debt to finance aggressive counter-discounts. Shareholders of major suppliers, everything from transmission manufacturers to electronics providers, are bracing for turbulence as production schedules may shift abruptly to meet the changing demand. Even international markets are paying attention, with reports out of Tokyo and Frankfurt noting that Toyota's bold move could ignite similar strategies in Europe and Asia, where truck demand is steadily climbing. Consumer behavior is shifting almost overnight. Social media is flooded with videos of buyers live streaming their purchases, detailing the unprecedented deals they're scoring, and encouraging others to jump in before inventory dries up. Enthusiast forums are buzzing with speculation about which trims and configurations will sell out first, and whether dealers might quietly hold back high-demand models to create artificial scarcity. In some regions, local news outlets are running live coverage from dealership lots, capturing the atmosphere more reminiscent of a Black Friday electronics sale than a typical weekday in the auto business. Inside Toyota, sources close to the strategy team suggest that this pricing shock is only phase one of a broader plan. There's talk of an accelerated rollout of next-generation hybrid and fully electric truck variants, using the current discount frenzy as a bridge to win long-term loyalty before the EV market reaches critical mass. Engineers have reportedly been instructed to fast-track software updates and accessory packages so that buyers feel they're stepping into the most advanced trucks on the market, even as competitors lag on technology integration and battery range improvements. The government is watching too. Federal trade and economic agencies are reportedly monitoring the sudden price fluctuations for signs of market distortion, while some regional policymakers wonder whether this wave of discounts could actually cool inflation in the auto sector. A rare piece of good news for consumers battling high costs elsewhere. Banks and lending institutions, sensing a potential flood of applications, are quietly adjusting risk models and interest rate spreads to accommodate what some are calling the most aggressive auto buying surge in a decade. And still, the question hangs over the entire industry. How far can this go before someone blinks? Suppliers across North America are beginning to feel the pressure as production forecasts are rewritten almost daily. Steel mills and component makers that had braced for a slow quarter are now running extra shifts to prepare for a spike in orders, while shipping companies scramble to reroute cargo to Toyota assembly plants to keep the pipeline flowing. Ports on the West Coast are already reporting a rise in incoming auto parts, hinting that Toyota anticipated this surge and quietly lined up its logistics long before the public announcement. Dealership alliances and regional dealer councils are also holding emergency meetings, some debating whether to raise or drop their own add-on fees to stay competitive during the rush. In states like Texas, where truck culture runs deep, dealer principals are fielding calls late into the night from customers determined to reserve specific trims before weekend test drives even begin. Independent mechanics and aftermarket shops are gearing up as well, ordering extra inventory of lift kits, performance exhausts, and bed accessories to capture the wave of customization that always follows a boom in new truck ownership. The energy sector is watching closely. Oil and gas contractors, pipeline companies, and renewable energy installers all rely heavily on fleet trucks, and Toyota's sudden discounts could shift how these industries plan budgets for the next fiscal year. If bulk buyers seize the moment, fuel demand and service contracts may rise in tandem, giving a subtle boost to regional economies from the Gulf Coast to the Rockies. Economists caution, however, that such rapid growth could create localized shortages of skilled labor, from factory workers to certified technicians, tightening an already strained job market. Consumer psychology is evolving in real time. Surveys conducted just days after the announcement show a measurable uptick in confidence among middle-income households who had postponed big purchases for fear of inflation. Many now view a brand-new truck as not only attainable but a smarter financial move than buying used, especially as resale values of late-model vehicles begin to soften. Financial planners are reporting more clients asking whether it makes sense to reallocate savings or tap low-interest home equity lines to capitalize on the deals before inventories shrink. On Wall Street, hedge funds and large institutional investors are dissecting every signal from Toyota's global operations. Analysts speculate that if this aggressive pricing strategy boosts U.S. market share even slightly, the long-term payoff could outweigh the immediate margin hit. Rumors swirl that other Japanese automakers may adopt similar tactics, potentially triggering a new wave of competition that stretches from Detroit to Seoul. Currency traders, too, are eyeing the yen-dollar relationship, wondering if Toyota timed the move to exploit favorable exchange rates and squeeze even more leverage from each U.S. sale. Meanwhile, inside Detroit's executive suites, strategy teams are running late-night simulations. If Ford or GM responds with matching discounts, they risk eroding profit per vehicle to unsustainable levels. Yet standing still could mean ceding critical market share in the most profitable segment of the industry. Suppliers whisper about contingency plans, and some insiders claim that emergency bids for raw materials are already being floated in anticipation of a rapid counteroffensive. The entire competitive landscape is teetering on the edge of a high-stakes standoff, with billions of dollars in annual revenue hanging in the balance. And as the frenzy builds, ordinary buyers continue to flood dealerships, posting real-time updates on social media and fueling a sense of urgency that shows no sign of slowing. Even local governments are beginning to feel the ripple effects. County clerks in high-volume truck states like Texas and Oklahoma report a sudden spike in title and registration requests, forcing offices to add weekend hours just to keep up. Insurance agencies are fielding a flood of policy adjustments as new owners rush to secure coverage, prompting some carriers to offer temporary discounts of their own in hopes of attracting long-term customers. Rental and leasing companies, sensing opportunity, are quietly negotiating bulk purchases to refresh aging fleets before competitors drain dealer inventories. The tech world is sliding into the action too. Navigation app developers, telematics providers, and connected vehicle software firms are accelerating partnership talks with Toyota dealerships, hoping to bundle premium services with every new sale. Startups focused on fleet management and predictive maintenance see a golden window to capture thousands of new commercial customers who are suddenly modernizing their equipment years ahead of schedule. Venture capital firms are already scouting these companies, anticipating a surge in demand for data-driven tools that keep larger truck fleets efficient and profitable. Consumer lending trends are shifting at breakneck speed. Credit unions and regional banks that once tightened auto lending criteria are now relaxing terms, tempted by the sheer volume of qualified buyers walking through their doors. Some institutions have introduced same-day approvals and extended repayment windows, betting that Toyota's historically strong resale values will keep default risks low. National lenders are watching carefully, aware that this wave of financing could set new benchmarks for auto loan products across the industry. Even the aftermarket energy sector, from specialty fuel providers to EV charging infrastructure companies, is bracing for change. Toyota's aggressive discounts include hybrid and electrified models, meaning a larger share of buyers may opt for trucks that blur the line between traditional gas power and next-generation tech. Utility companies are preparing for a rise in home charger installations, while rural gas station owners eye an unexpected uptick in foot traffic as more contractors and long-haul drivers upgrade their fleets. The cultural conversation around trucks is shifting almost overnight. Lifestyle influencers who once focused on high-end luxury SUVs are pivoting to content about affordable full-size pickups, showcasing road trips, towing challenges, and DIY modifications to millions of followers. This new wave of enthusiasm feeds back into demand, creating a cycle where every viral video or trending hashtag draws more buyers to dealership lots. Marketing experts warn that rival automakers risk losing not just customers, but cultural relevance if they can't capture the social momentum Toyota has sparked. International trade analysts are paying attention as well. With North American plants ramping production, shipping routes from Mexico and Canada to the United States are experiencing sudden congestion, prompting freight companies to reassign vessels and rail capacity. Border officials are coordinating with logistics firms to streamline customs procedures, anticipating weeks, perhaps months, of elevated traffic tied directly to Toyota's strategy. Economists point out that this surge could subtly influence GDP figures, adding an unexpected boost to cross-border trade statistics in the next quarterly report. And through it all, the central question only grows louder. How long can this extraordinary wave of demand last before supply chains, competitors, or economic forces force a dramatic new twist in the story? Industry forecasters are now revising their models almost daily, trying to keep pace with the chaos. What began as a bold pricing maneuver is morphing into a broader economic event, with ripple effects stretching from raw materials to retail showrooms. Analysts who once predicted a sluggish quarter for automotive sales are now projecting double-digit growth, while trucking associations brace for a fresh wave of commercial registrations that could reshape freight logistics for the rest of the year. Inside Toyota's supply network, managers are making rapid-fire decisions. Some plants are adding weekend shifts, while others are considering temporary expansions to meet demand. Component suppliers, from transmission specialists in the Midwest to electronics manufacturers in Asia, are negotiating accelerated contracts to secure priority shipping lanes. Air freight bookings have spiked as critical parts are flown in to avoid bottlenecks, and shipping brokers report bidding wars for container space as far away as Singapore and Rotterdam. Meanwhile, financial markets are showing unmistakable tremors. Bond traders are watching corporate debt spreads tighten around automakers with strong balance sheets, while weaker players see borrowing costs creep upward as investors price in the possibility of a prolonged price war. Auto sector ETFs are experiencing record volumes, with day traders jumping in and out of positions on every rumor of a countermove from Ford, GM, or Stellantis. Analysts on live financial networks debate whether Toyota's gamble will force a complete revaluation of U.S. auto equities for the next fiscal year. Regional economies tied to manufacturing are already reaping benefits. Small towns that feed the supply chain, places that produce aluminum castings, specialty fasteners, or upholstery fabrics, are reporting sudden job postings and overtime opportunities. Local chambers of commerce in states like Kentucky and Indiana are preparing incentives to attract temporary workers, anticipating a labor crunch if the surge continues. Community colleges and trade schools are rushing to advertise short-term training programs, sensing a new wave of students eager to seize high-paying technical jobs in an industry suddenly running hot. On the consumer side, a subtle shift in mindset is emerging. Surveys show that many buyers see these truck discounts not just as bargains, but as hedges against future uncertainty, an asset they can rely on if economic conditions worsen. Families that once prioritized compact SUVs are considering full-size pickups as multi-purpose investments, capable of hauling, commuting, and even serving as backup work vehicles in tough times. Financial advisors note a sharp rise in clients seeking advice on how to fold these purchases into long-term planning, from tax considerations for business use to resale strategies if market prices climb again. Global automakers are quietly recalibrating their strategies. European and Korean brands that planned gradual U.S. expansion are suddenly questioning whether their timelines can hold. Industry insiders whisper that a few manufacturers are even contemplating joint ventures or limited alliances to share the cost burden of matching Toyota's aggressive pricing, a move that could reshape partnerships across continents. Freight analysts warn that if multiple companies follow Toyota's lead, global shipping schedules may face a prolonged surge, straining ports and rail lines well into the next year. And as whispers of competitive retaliation grow louder, dealership networks across the country are bracing for what could become the most intense pricing showdown the truck market has seen in decades. One that shows no signs of cooling and may only accelerate as the next wave of strategic moves hits the industry. Toyota's audacious price cuts have already rewritten the rules of the US truck market, but this story is far from over. Competitors are scrambling, supply chains are straining, and buyers are rushing to lock in deals before the landscape shifts again. Whether this becomes the spark for a long-term price war or the turning point that redefines how Americans buy trucks, one thing is certain. Every player in the auto industry is now on high alert. If you found this breakdown useful, hit that like button and share it with anyone eyeing a new truck. What do you think? Will Ford, GM, and Ram fight back? Or is Toyota about to own the road for years to come? Drop your thoughts in the comments and be sure to subscribe so you don't miss the next chapter in this unfolding battle.